So let us start discussion on issue of debenture. Friends, debenture is not a new topic for you. You have already learned this topic in your 12th standard. As you know very well that debenture is a one method of borrowing funds directly from the public. Company can issue equity shares. In the same way, company can issue the debenture. Debenture is not same as equity share, but it's a liability, it's a long-term debt for the company directly can borrow the money from the public. That is known as debenture. In 12th standard you have already learned this topic, so it is not necessary to discuss in depth. You know very well it is available in the 12th standard, but speedily we will repeat this topic and basic characteristics and the meaning of debentures that we will discuss in this session, in this lecture. A small video I have prepared because the long videos become boring. So only in this chapter what we will learn, actually in this chapter issue of debenture, we will learn what are the journal entries and how to record the debentures related transaction in the books of the company. In accounting point of view, we will not go for the detailed discussion of the formalities for issue of debentures and what are the legal requirements and all that. Only and only we focus on accounting part, that is how to record the transactions of issue of debentures in this discussion. How to write the transactions, what are the journal entry, that we will discuss in the next video. But right now in this video we will just discuss what is debentures and what are the characteristics of debentures and all that. So the topic is issue of debenture. So first of all we will go for the discussion of meaning of debenture. So this is meaning of debenture. Debenture is an instrument by which the company can borrow money from the public or others. A joint stock company can borrow money from the public by issue of debenture. Company can invite them to lend money, and in against it company issue them acknowledgement and that the company owes a particular amount to them, and this is known as debenture. As per the Companies Act 2013, section 230 said that debenture includes debenture stock, bonds, any instruments of company evidencing a debt, whether constituting a charge on the assets of the company or not. So this is the definition as given in the books, as we have already provided you a material and all these theories are available in it. You just read it. So what is debenture? Debenture is an instrument which acknowledging the debt of the company. So debenture is a long-term debt for the company. To understand well, let us discuss the various characteristics of the debentures. Mind well, this all characteristics are important, which giving you a meaning of debentures, understanding of debentures, and from examination point of view, each characteristics is a small question, and as may be asked as MCQ type of question or small question, what is debentures, and so let us discuss the characteristics of debenture one by one. So first characteristic is debenture is a long-term borrowing. As I say, for a company, holders of debentures are known as debenture holders and are considered as creditor for a company. Mind well, creditors of the company, not the owners. Interest on debentures is compulsory to pay and it's a legal obligations of the company. Interest rate is pre-decided and mentioned with the debenture as prefix. Normally debentures are redeemable as it is debt. Company can return it if company not need to increase its debt and to decrease its debt and burden of interest. Debentures are shown under the head of non-current liability on the liability side of the balance sheet. Then number 6, debentures includes bond, debenture stock and any other instrument acknowledging debt issued by the company. So debentures are also known as bond. Debenture stock may be issued. Okay, so these are the various forms of issue of debentures. Debenture holders does not having any voting right like shareholders have. They are liable to get interest regularly till the amount is not redeemed by the company. They are liable to get back their money after certain period of time mentioned in terms and conditions for issue and redemption of debentures. Debenture holders are liable to get back their money before shareholders in case of winding up of the company. Debenture holders are tradable securities in share market like share. Okay, so these are the various characteristics of debentures which gives you the meaning of debentures. Okay, by reading it, by understanding it well, you can give the definition of debenture. So what is debenture is that can be understandable by this characteristics of the debentures. Now normally debentures are redeemable, but according to or on the basis of terms and condition of issue and redemption of debentures are classified in the various categories. Okay, or various types of debentures are these. So you already learned in the 12th standard. I'm not go for the detailed discussion of it, just revise it or give you the revision reward. So on the basis of securities, you know that debentures are two types: naked debentures and mortgage debentures. On the basis of redemption, these are redeemable and irredeemable debentures. On the basis of facility of transfer, there are bearer debentures and registered debentures. And on the basis of convertibility, there are two types of debentures: convertible and non-convertible. Very easily understand if you remember this four classification on the basis of security and transfer and redemption and convertibility, you can easily remember it. And now there are some special kinds of debentures, okay, which are zero coupon bond debentures, deep discount debentures, deep gain debentures. So these are the various types of debentures, may be asked in your examination, and you have already learned this concept in your 12th standard, so it is need not to repeat it again and again. These are the types of debentures. And now the next topic is issue of debentures. Okay, the most important thing for our examples, for our questions, or to be asked in the examination, what are the general entries to understand it. First of all, you must be know that issue of debentures. So there are two types of issue. Means company can issue the debenture for consideration of cash and for consideration other than cash. That for consideration, normally the company borrow the funds, borrow the money from the public for the purpose of getting the cash, getting the money. But sometimes company issue the debentures against the purchase of land and purchase of building, purchase of other assets of the other company, purchase of the other company. So company may issue the debentures, and that debentures are known as debentures issued for consideration other than cash. So one by one we will discuss all these things later on. And apart from this, if company issue the debentures or either issue for debenture for consideration of cash or for consideration other than cash, company can issue debentures in three different way, and that is debentures can issued at par, that means at original price, at premium, that means an additional price, and at discount, that means at lesser price. So these are the various way then how company issue the debentures. Okay, so this is and for now this is end of this video, the basic fundamentals of debentures. In the next video we will discuss how to write the journal entries in the books of the company, and what are the journal entries in the books of the companies in the various this situation if company issued debentures at par and premium and at discounts and for consideration of cash and other than consideration of the cash. So thank you very much.